What if you could make money without working an extra hour? Imagine getting paid every few months just for owning a piece of a company. This isn't a lottery win or some internet scam. It's a proven wealth-building strategy called dividend investing. Most people believe the only way to earn money is to trade time for a paycheck. You work, you get paid, and when you stop working, the income stops too. Dividends break that rule. When you buy shares in certain companies, you become a partner. And those companies pay you a share of their profits, called a dividend, simply for holding the stock. You don't manage the business, you don't deal with customers, yet your bank account grows. Some businesses have been paying dividends for decades, through wars, recessions, and market crashes. Companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble have rewarded shareholders year after year, often increasing those payouts. If you owned 1,000 shares of a company paying $2 per share annually, you'd earn $2,000 a year in passive income. That's before reinvesting, which is where the real magic happens. The first step in the Dividend Blueprint is choosing quality companies. Focus on those with a long history of paying and growing dividends. Many investors start with dividend aristocrats, companies that have raised payouts for 25 consecutive years or more. These businesses are typically profitable, stable, and committed to rewarding shareholders. Don't chase the highest yield. Often, high yields come from companies in trouble. Sustainable growth matters more than short-term gains. The second step is reinvesting your dividends. Instead of spending them, use the payouts to buy more shares. This creates a compounding effect. More shares mean more dividends, which buy more shares, and the cycle continues. Over time, this snowball effect can turn small investments into substantial income. The third step is patience. Dividend investing is not a get-rich-quick plan. In the first few years, your payouts might seem small, but over time, they grow often faster than inflation, giving you more spending power each year. Consistency is key. Keep investing regularly, even during market downturns. Avoid common mistakes, like chasing extremely high yields or panic selling when stock prices dip. If the company remains healthy, your income remains safe. In fact, downturns can be opportunities to buy more shares at lower prices. Here's a simple example. If you invest $10,000 in a stock with a 4% yield, you'll earn $400 a year. Reinvest it. Add small contributions over time, and in a decade, you could be earning thousands annually. Many investors eventually live entirely off their dividends, never touching their original investment. The Dividend Blueprint is more than an investing method. It's a mindset shift. Stop working for money and start letting money work for you. The earlier you start, the bigger your advantage, because compounding needs time to work. Start today. Research 3 dividend-paying companies with strong track records. Invest what you can and watch your passive income grow. Jobs can end, but a strong dividend portfolio can pay you for life.